me. And especially if you think there are $4.4 trillion worth of bonds outstanding tied to inflation metric. Help aggregate and work to a framework that is stipulated by the federal statistical system. Why do we need independent 13 departments that are actually calculating the federal statistical system and across weather, across utility, energy, across BLS, Bureau of Labor Statistics, and there's so many overlaps, yet they're all siloed and they don't talk to each other. The world, not only the US, but the whole world, 42% of the world's population are going to be voting a new president, new prime minister, or a new, leadership of their nations. And what does that do? Generally in years of elections, there's generally a lot more fiscal stimulus into an economy.
Stefan, welcome. And welcome readers who are joining us live. Stefan Rusk is the CEO and founder of Truflation, and we'll listen to him explain how this idea came about, but it represents a solution for a lot of people that have to rely on BLS data that has some shortcomings in how it's put together and monitored and measured that today's technology can largely resolve. And Stefan has come up with a way to do that. We've known him for a little while, and we're really happy to have him on to help our subscribers understand inflation better. Stefan, I'd love to hear you talk a little bit about the shortcomings of inflation and how that conspired to make you want to take the leap and start this company of yours.
Yeah, no, thank you, Robert, and it's been a real pleasure meeting you and really encountering all the expertise and insights that both you and Brendan and the network that you have and what you've been building out at Markets Policy. What got me into this? I studied economics. In 2021, I was running a business that was very dependent on commerce, retail commerce, payment systems. And Jerome Powell told us that inflation was transitory. And I just couldn't see how inflation was going to be transitory if we shut everything down and we, printed the amount of money that the governments had announced that they were going to print, and inflation was only going to be transitory. And that was really the spark. I mean, that sort of got me looking into the BLS, how they track inflation, the vertical integration, the type of data that they use, the process and the models that they use to calculate the data and work with that data, as well as just the MO that they operated under. And I just felt it was so flawed that it could use some modern thinking and taking a sort of a developer mindset associated with aggregating that data and putting together some expertise in terms of using that data in a more modern fashion at scale with real-time data, immutable, censorship resistant, all of those elements, and transparent so that anybody could track it. And that was really the goal. And it was really funny that I saw this as a bit of a pet project at the beginning, which then resulted in getting significant backing by real big players, from Chainlink to Balaji and some really Coinbase, that really sort of had faith in what we were doing and wanted to see this grow and scale significantly. And yeah, that's where today we track 18 million items, 3 price feeds per item. It's real time, updated every day. In contrast, the government tracks 80,000 items. They come in, sort of report a month delayed. They go back and edit the data. And so we just felt and feel, and the market has shown that we're doing something different, something innovative. And some people question, why are you doing it? But in essence, they are all intrigued by what we're doing and extremely interested to learn how we go about doing it, and calculating truflation. and what makes it unique, and why is it so different from inflation itself?
Well, I know that some of the things, and Brendan has studied CPI when he was at his hedge fund,
Yeah.
and is something of an expert at it as well. And Brendan, I guess some of the things that we've talked about, and it's on your website, the surveys. There's a heavy reliance on surveys. They use limited data sets in a world replete with data. They constantly revise and adjust, sometimes with a little foresight, but usually as a surprise. And they've got a gigantic labor force that can often lead to errors that are reflected in that. Are there, how big are those categories? What are the things that lead to the biggest errors, you guys?
So, I mean, we found the housing market was really the biggest category, right? We and there are significant differences between our reporting and the model. We weight housing as about 26% of household spending. The BLS, is all the way up at 40+% of household spending. Um, yeah, and so that's one big difference. We see the data that they pull together on the housing side up to some 9 months time lag, whereas we actually capture a lot of the data in real time, where we pull in insights from Zillow, Trulia, Redfin, and we work together very closely with like Penn State University to be able to give that data in real time, and accurately, as accurate as we possibly can, today. And so I think that's one big category. And then we break things down into sort of 12 different categories, and we sort of break out certain elements in more granularity than the BLS do. They have 6 categories, we have 12. We extract certain elements outside and then put it into transportation, for example, fuel. So as a part of transportation, we all need fuel, and so we blended those in together. We separate out utilities as its own unique cost, from water to gas, and to electricity, etc. And so that's sort of how we've built out our model. We are very transparent in our methodology. We have a detailed documentation. We update it every 6 months, and we expose the methodology to the community, and we take in feedback from the community in terms of how we could improve it, take in suggestions, and we work with big institutions that actually also help us with the breakdown of consumer patterns, consuming patterns, household patterns, spending patterns.
One of the big advantages of being a data company, of course, is to open up your data through APIs to
Yeah,
customers who can, if they don't like your view of the weightings of the 12 categories, they can do it however they want, right?
exactly.
Is that how many of your clients work with you and their data?
Twofold. The bigger clients will do that, right? They have the resources, they have their own analysts. They take the data. We have independent analysts that subscribe to our data feeds, or download our data and then do their own calculations using the tools that are available in the market. So we have multiple different options. Certain customers like to hear our opinion, our interpretation. They may not always take our data at face value, but they do want to hear our analysts, what their thoughts are, and why we're thinking like this, and what's the underlying data to warrant and justify that thought process. And so we do that in the form of, we have a Twitter Spaces for the public, so everybody can listen in. That's a lightweight version. We go into a more webinar focused angle where we invite, let's say, family offices, smaller prop trading funds. They can come in and listen and get insights in a sort of group and have a bit of Q&A. And then there's the one-on-one session where we work with specific firms, and they get one-on-one time with the analysts, and leveraging the data, how we interpret the data, how we extrapolate the multitude of data sets, and then combine them to do predictions. And that's where we offer forecasting, and we go up to 1 to 3 months out, and we try to predict where inflation is likely to head, but also the economy at a higher level.
The data that you collect, you put on a blockchain so that it is
Yep.
immutable.
Yep.
When the CPI is revised, I'm kind of curious just about the technology behind that.
Yeah.
How
Yeah.
do you, yours might be immutable, but theirs is not. What would do, is it just an additional footnote and you can now pull down either the original or the revised?
So yeah, exactly. Very much like that. We write all the originals to the blockchain. We can't change that anymore, but we may take a new feed when we update the methodology, for example, or we've agreed and had notified you in advance. This is what the changes will be. They're coming, and then we'll have a different strand in terms of data feed that will pick up where the last one left off. Or we get a big new data dump or a new data supplier that gives more accurate information, and then that blends in with the other data, and that may skew. That then gets on another strand, if you will, or another data stream, as we call it.
So it's possible for your customers to take a look at a change in methodology that the BLS implemented to CPI at some point in time and compare the difference between the reported
Oh yeah.
CPI after that and what the CPI would have been without that change. Is
Yes.
that right? And have you looked at very many of those? And does that support the thesis that there's an inherent conflict of interest in the government's interest in having a lower CPI because so many payments are connected to it and all the reasons that we know. Is there evidence that those revisions have typically suppressed CPI?
That's a nice piece of cheese on the mousetrap. uh, but yeah, no, it's we haven't done that much studying. We've done the studying more, especially in January timeframes when the government does do methodology changes and they announce it post the reporting. And we find a lot of flaws in that. We find a lot of discrepancies. We are very confused in terms of how they get to those numbers. The biggest example is we had an inflation increase in January, whereby we had a much higher inflation than market expectation. Sorry, the increase was in December. In January, we dropped a lot less than we anticipated, but oil dropped 10% in that same month. And it's like, how can you justify that high a value? Food dropped. People weren't spending that much money. Clothing dropped. So all these items dropped significantly in price feeds. We just couldn't correlate that back to the way the BLS had calculated and announced a 3.1% January inflation versus we actually thought it was going to go down to about a 2.6, 2.5%. That's where we saw the decline based on the data that we were seeing. How do we now correlate that with what the BLS was reporting? And again, housing really made a big difference, and that changed and
So
skewed
housing,
a lot of the numbers. Yeah,
so your
housing
reconciliation showed that housing was the biggest gap. And
biggest.
housing is, again, not only is the weighting larger, but also the subjectivity is high. Isn't
Yep.
the process of developing a housing component? Would you mind reviewing that? We did have a guest on a while back who talked about the survey questioning that seemed to be pretty difficult to connect because it asks homeowners what they think their house could rent for.
Exactly. So it's done manually, right? I get a survey, I fill out all these different questions that I get related to housing, rent, costs, mortgages, whatever it might be, that it's just a shelter. And we basically go out there and pull this pricing information. If you go onto truflation.com and we have a whole data set associated with what we call leading economic indicators associated with housing, number of housing coming onto the market, mortgage rates, and a whole bunch of other data sets. But what we pull is real-time information associated with rent from Zillow. What are they going from? We're now trying to pull in actually temporary housing, where we're actually getting Airbnb rates, and insights like that to then complement
So
real
you're
time
not
what people are
surveying
spending.
somebody's guess or opinion, you're
No,
actually taking the real data.
no.
What an idea.
And we're seeing that on number of mortgages issued, right? How many new mortgages were issued? How many old mortgages? What's the time outstanding associated with those mortgages? If they're outstanding and have zero interest rate, they're likely to drop in nominal value. If they drop in nominal value, that means the actual amortization or interest payment, which is near very low, is going to be much lower. So in essence, your shelter costs are coming down the older your mortgage is. And so and we don't see many new mortgages have being issued in the last 3 to 4 years.
Fascinating. Well, you talked about just now, your January indication looked like about 2.6, and inflation came in at, what was it, 3.0?
3.1.
3.1.
3.1.
But that's your attempt to replicate the CPI and anticipate what it is. It's not your actual weightings of what you think real inflation is. And that number is much lower, 1.4%, right? And is fuel the big swing factor in that case, or was it a combination of a whole lot of factors?
No, I think and bear in mind the 1.7% that you see on the truflation.com website is a year-on-year comparison based on the average household spend across consumer products, not across assets, not over the last 3 years. It's just how has price moved from last year to this year. If you go back 3 to 4 years, we're looking at nearly 25% inflation in aggregate, in aggregate. And so if I'm losing a quarter of my income, I have a hidden tax of a quarter of my income is being taxed. Wow, and that's what people feel today. And that's why they may be questioning the 1.7%. But actually, go back. You're still, it takes a while for it to realize the bag of chips is smaller. Wow, those eggs, they're now no longer $4, they're $7, $8, right? So it's nearly double the value. The meat, I can't afford the steak anymore. I'm going to go for sausages or whatever it might be, but you're going to sort of switch your patterns. And people are really struggling, I think, with that increase over the last sort of 3-4 years, if they hadn't had their money in assets.
Is the 25% you just referred to over several years,
Yes.
what's the CPI equivalent of that?
Good question. I wouldn't know off the top of my head.
Feels like
we
it
don't
would be lower since it peaked out.
it would definitely be lower. We were on the high side. We hit, based on true CPI, we hit 12%, 12.8%, I think was our high water mark. The government's was only 8% high water mark. So it would be much lower. It would be maybe in the 18%, I would guess. But because we're much lower now at the low end of the water, sort of at the spectrum, we actually dropped all the way down to 1.3%, whereas the BLS numbers are still around the 3% and have never broken down. But I think if we watch the 60-minute plus interview with Jerome Powell, he definitely made a couple of remarks that I thought was interesting. One was, they didn't react fast enough. So I think his learning going forward is likely to how will I be reacting faster? And we saw that with the BTFD. They reacted really quick, shut it down. Okay, is that a sign? Is that them? Is that Yellen? Sort of, but they're talking to each other. And then the second element is I can't remember what else he said, but he said that actually, inflation, he's not going to, I don't think he'll bring it down to 2%, right? I think they'll stop at around a 3%. And to be honest, I think that's okay. It's not bad to have 3% or 4% inflation as long as it's consistent, right? As long as we're steady at that 4% and we can work with that, and that's okay. That means we're just printing 4% more money than the economy is growing, in essence. That's in simple terms.
Yeah, you might have some people disagree with you on that.
Yeah, I'm sure. But it's like
2% is bad enough for a lot of people.
No, it's really bad. And we spend a lot of time educating, right? We're trying to educate what is inflation, what does it mean for you, And how can you hedge yourself against inflation, especially if it hits you in specific categories? And the only way is we don't even look at asset inflation, right? I mean, asset has really appreciated in value, and against the US dollar, if you look at that, the price of assets have inflated significantly. How do we take that into account? Luckily, that's in the balance sheet and it's not in the P&L, so we can actually accrue that in terms of value, and leverage that.
Well, I think to the extent that we have seen in this last cycle that it's fiscal stimulus in
Yep.
particular that tends to hit the CPI, and central bank accommodation is more an asset phenomenon.
Yep.
And it seems like we've tilted into, over the last decade or so, a structural deficit problem that's so much bigger that I think this CPI winds up becoming arguably a much more important source of volatility or source of investment concern over the
Yep.
next decade than it has been over the last decade.
Yeah, and I mean, bear in mind, the world, not only the US, but the whole world, 42% of the world's population are going to be voting a new president, new prime minister, or a new, leadership of their nations. And what does that do? Generally in years of elections, there's generally a lot more fiscal stimulus into an economy. So what does that mean? That means the debt's likely to go up a bit more. The government's going to be spending money, and my view is largely the government it's good for governments to spend money. If you're Keynesian, you're going to be all over that. You're going to want to see that all the time. However, if you're spending money on items that don't add incremental value to the economy, e.g., building new roads that connect societies together, building better telecommunication capabilities so we can interact with each other, better transportation, airplane travel, or whatever it might be, that will then further, provide increased commerce between the different cities, different states, different counties. That's where we should be spending our money. And I think that hasn't really happened. I mean, we've got the CHIPS Act, we had a couple of things, but it's moving very slowly. And I think that's where we should be spending much more, investing a lot more money.
Are there some, what are some of the interesting ways that your customers have been using your data? Have you come across things that strike you as particularly interesting that you either hadn't thought of or much more important than what you had considered?
Yeah, there was a trader in Europe. We have weather data, and we pull in a lot of weather data from a number of different certified partners. And wind, they were investing across, they were playing arbitrage across European energy grids, and they were trying to take renewable energy and then pipe that into the grid at the best price points across the different markets and extract the value from the different markets. And they wanted wind data very specific off the Scottish coast, the Spanish coast, and then the North Sea. I mean, it was like really, and then no, it wasn't the North Sea. What's up in Denmark, up around that area where it's like a lot of wind farms out there. And so they were trying to get, what are the wind patterns? Give me 10 years of historical data associated with wind patterns, and then energy prices, right? So get me the energy prices of those markets. We got them the UK market, the US market. We looked in French and German energy prices as well. And then we got the wind data. And so that's sort of a foundation for some of the future markets where we might go into, especially around energy costs that we've managed to aggregate.
Oh, so that's fascinating. So
Yeah.
people, I didn't appreciate that there was such a specificity in your data that people could explore.
Yeah. I mean, we don't. So if you go on our website, you can go to, I think we call it data marketplace, so data and indexes, and then you get a whole list of data. A lot of the data we're still documenting, we're making available, and we just can't keep up with the velocity. of compared to the amount of data that we have to make it available for everybody. But if you come and ask us for, do you have this type of data? We'll have it and we'll just make it available, and then that will set a priority for us. But yeah, that's we have weather data, we have commodity data, energy pricing, yeah, I mean supply chain information, so shipping costs, shipping loads. Yeah, lots of different types of anything that might influence the price of goods.
In terms of, kind of predicting it, how does that work? How do you guys think about that? I mean, it's one thing to, predict what the inflation was last month, things like that. But how do you think about, your 2-3 month outlook? How does that work? I mean,
Yeah, so the monthly outlook, we're a bit more. Sorry. Yeah, no, I mean, with the monthly outlook, slightly easier than the 3 months out, the quarterly outlooks, because there's so many black swan events, particularly with the geopolitics that are taking place now, that we're not comfortable yet to have that on a consistent, strong basis. So we just generally have huge variabilities in the 3 month prediction. In the single month prediction, what we try to do is infer a lot of historical data. So we go back, I think we have some 12, 13 years of historical data. And then we infer trends that we see across the different categories and sectors, and then the weighting across that. And then we try to project into the future, what are some of the situations, especially around key drivers, sort of credits, credit card loads, saving rates, and then what does that mean to and ultimately supply chain, things like that. Those then all come into the mix. And given the compute resources that we have available, we actually, through our node networks, we operate with a decentralized network of ultra high availability node operators that actually keep high-end compute resources that allow us to then do a lot of these indexing and calculations into the future. Yeah, it's a challenge. I mean, we have 3 different teams. Yeah, just really working on indexing the data, then doing the calculations and the formula. So they're the math scientists behind this, and then sort of the whole engineering associated with it, and then the hosting, right? So that's another. So it's like 4 different, and they all have to work together, which is always fun.
No, totally. Because I mean, when you add it all together, it gets the whole inflation, and obviously it's hard to tell what oil is going to be in 3 months with everything that's going on. But there's other things that are kind of more fundamentally driven, like you were saying, with the shipping issues and things like that. You must have a lead on that. So I'd imagine you have some clients that aren't just interested in the overall CPI, but like you said, with the guys with the wind, I really care what the price of I don't know, pick anything, especially anything that has to be shipped. I'd imagine you have a good outlook on that.
Yeah, and that's sort of the weighting, right? And the US is a bit easier. The data availability is much higher than any other nation around the world that we've found. So we're actually in a much better position than most other countries. So no matter how gloomy we look at it, we're better off than a lot of other countries.
Exactly.
That's for sure, right? So at least that's the saving grace, sort of. But I think we all look to pursue even far greater success than just constantly trying to be better than everybody else. We want to be by far using our maximum potential. That said, one of the things I would never have expected chocolate to jump the price that it has, right? Cocoa. I mean, it's like, I think it's up like 5x in the last sort of 3 months alone, right? It's really spiked significantly. Orange juice last year was a big one. Everybody was buying orange juice futures. I mean, it's like, why? What is it? I mean, do we all drink that much orange juice in the morning? And I just somehow can't explain. I mean, ultimately, weather was really hot in the summer last year. So did that have an impact? So we're still trying to sort of grasp what are the impacts of items like that, right? Is chocolate that popular? Do that many people eat chocolate? Do we eat it in every what do we use chocolate for? Cocoa, you know, it's like
Yeah.
it's not coffee. Anyway, yeah.
Stefan, when you make the prediction for a coming CPI print,
Yeah.
I imagine, some period of time beforehand, your accuracy is going to be very high, and that's because a lot of the components of the CPI, when it's announced,
Yeah.
are working on a lag, and you're working on real time, and so
Yeah.
you're actually seeing what they saw. And when you go out 2 months and 3 months, an increasingly larger portion of the CPI is not known
Yeah.
at that point, right? And is that the main reason that there's a degradation in the accuracy of the forecasts?
Less on the 3 month area. We find that actually the formula that we use to calculate our prediction is we can take pretty much that same formula for the BLS number and predict that as well, because we're just using the same. We now sort of have learned over the last 3 years how they break it down. We've modeled that out a lot of the times, except when, again, in January, where they generally change their methodology and they change their weightings. That then has a significant impact, but it doesn't impact the prediction capability. It changes all the variables in the calculation itself, not the actual predictability associated with it. Yeah, we found that we are about, I think it's 10 basis points or 1 basis point apart from where on average, from predicting the BLS outcome over the last, I think it's like 24 months that we started predicting it, or 20 months that we started predicting.
And I'll bet a lot of that 0.1 error comes from their revisions that they pop on you when they announce it, right?
Especially, yeah. I mean,
outside of
we
that,
were,
you'd be dead
yeah,
on it, right?
yeah. If it weren't for that, it's very intransparent. So you don't know what they're really always putting in it, and they have substitutions, and so it's really hard to always guess it perfectly well. But I mean, some people have been doing this for years, right? For decades, and sort of trying to predict it, and they may have this down even better and have refined it even further. So there are definitely historical advantages of trying to predict where the number is going. I think, we were really bad in, I mean, openly, admittedly, in predicting the January outcome. But again, they changed the weighting, they changed some of the methodology, and that had a really big impact. And we still today can't understand some of the justifications in there. But
it's fascinating. You really do have to wonder what are the motivations and who's who's behind it. Like why would they overstate inflation in January of 2024? It's very interesting.
But our view is very much why are we so secretive about it? Number one. Number two is, why can't we have an independent source, an independent technology provider help aggregate and work to a framework that is stipulated by the federal statistical system? Why do we need independent 13 departments that are actually calculating the federal statistical system and across weather, across utility, energy, across BLS, Bureau of Labor Statistics? And there's so many overlaps, yet they're all siloed and they don't talk to each other. They all have over 10, 20, 30, 40,000 employees. They all have hundreds of billions of dollars in budget. How can we actually department setting the frameworks associated with that, and then other people going out and doing that?
I have a guess. The answer to your question is, why can't we have that? Because the BLS was formed on June 27th, 1884.
I know, exactly. To be honest, that was one of the reasons. If this is over 100 years old, we've got to drive a systemic change to bring better, more accurate data to this market. Well, especially,
I mean, it's kind of obvious this is how it happens. Right? A company comes along and comes up with a better way to do it, and bit by bit. You know, if your system winds up being trusted by everybody, it winds up and I'll call it a database, really. You're just creating a gigantic database, right?
Yep.
And you've got your own interpretation that's for sale, and you've got the database for sale. And if that serves its purpose, then it will slowly erode the credibility of the government data, I would suspect. And they're gonna, you know, the more January 2024s there are, the faster that'll happen.
I mean, we hope so. I mean, that's what we're betting on, and we'd love to sort of collaborate and figure out a way how we can leverage our live, fresh data versus stale, you know, data, and the manual labor needed to collect surveys, count surveys together. In fact, there was an article in the Wall Street Journal, I think it was last year, where they spoke about 477 employees going to grocery stores to track manually the price changes across the food items on the shelves. I mean, you know, we are in 2024, you know, 2023. It was baffling to me. And especially if you think there are $4.4 trillion worth of bonds outstanding tied to inflation metric, to this one number. People are lending money to the government associated with that metric, and that isn't, there's no sense of urgency to get a better accurate reflection of how an economy is performing if I'm lending you $4.4 trillion. At the same time, I've got $34 trillion in debt. You would have thought that might sort of drive a bit of inertia, you know, waking up out of this inertia that, oh, we'll just take what's given to us and use actually a more accurate reflection.
All in due time, I suspect.
Yep.
Right? I mean, it's the tips, you know, AUM is because those investors don't have a better alternative.
Exactly.
And locking yourself into CPI is better than not. Very interesting. Well, I'm kind of curious, when you started the company, what was your view of the needs of the company? Like, how much technology how big a factor was technology in the launch, and how were you thinking about building this business? And
so
how
at
has it
first,
changed?
yeah, no, but really, that's we're just going through a big change right now. But we started off. I mean, I'm a techpreneur. I launched a number of businesses. I worked in the technology industry. I was at Sun Microsystems. We grew the Java virtual machine from, you know, an open source free software to a $700 million business, working largely with mobile operators and mobile handset manufacturers. Throughout that process, I was always viewed myself as a technologist, right? So in the technology space, I know how to build technology, and that's what my expertise is. And that's how we started. We were 3 to 4 engineers, and we had one spreadsheet jock, right? I mean, a real genie behind spread. He loves his, you know, BI tools, and he has all his tools. And so he was helping us, you know, calculate and clean the data and put the weighting in and try to replicate the BLS. That's all we were trying to do at the beginning. And just get that up into a dashboard. And all of a sudden, we caught the awareness of like a Chainlink and a Balaji and some really smart people that just encouraged us to continue doing this, and then gave us financial support, which allowed us to then really scale up. And where we really invested a lot on was in the data science itself. So we brought the head of Nielsen into the fold. He's been data cleaning his whole career. He's worked for Visa, HSBC, Citibank as well, where he'd been responsible for a lot of the data cleaning. And so that sort of really brought us to where we are today. We always needed technology because we want to ensure that the data is readily available. It's high availability. We are working as a modern organization. And today we're really sort of moving much more into the field of economic data, financial data, and then ultimately business development skills. So how do we invest much more in making revenue associated with the data, yet still providing a free foundation so that anybody can access the data and learn about inflation. So that's the challenge where we're at today. Where ultimately it's in bringing on more people. How do you keep how do you sort of keep the velocity of innovation going whilst you're bringing on more people? Ultimately, more decisions need to get made. More people want to be involved in the different types of decisions without slowing down the actual progress. So those are just new challenges that come up, and my role is to constantly make sure we have lots of new challenges and no longer the old ones.
Well, I'm going to guess that the launch of the Bitcoin ETF is bringing a whole new audience
huge.
Of awareness
Yeah.
about monetary supply and inflation and the currency debasement and things like that. So I imagine that the demand for the true inflation, great name for your company.
Thank you.
Imagine that demand's going to be growing.
Yeah.
And it'll be interesting to see how this inflation picture looks over the long run when you're actually measuring real data instead of what the CPI has been showing.
Yeah. We I mean, our biggest supporters from the beginning have been from the Bitcoin segment or industry, because ultimately they set up Bitcoin against inflation, right? That was the biggest hedge to go against inflation. And we've never had a finite resource that is very clearly limited in its number, 21 million. It's globally transportable, and immediately remittable or anywhere around the world. And so I don't think we've ever had something like this. And that this was ultimately to tackle inflation and debasement of the dollar.
Yeah, and the people that know about inflation have known the shortcomings of government data for a long time, but there just hasn't been a way to find the real number.
Yeah.
And
I think
yes,
both of you have been working in this space for a long time, right? And so from that perspective, you've gone through and seen, and it's a constant conversation point.
I had an investor friend from year 2000, 2006 teach me everything about central banking and the history of money. And it was so I kind of had a front row seat at the table of understanding how money really works in the world. And that knowledge has grown so amazingly with the advent of Bitcoin. It's just the general knowledge base has expanded dramatically. When I started talking to clients about it back then in the equity market, most people just didn't need to care and didn't know. And so it just wasn't, and it took it takes a while.
But if you go back five years ago, I reckon, if you look at the elections coming up now and you look at the polls, inflation is number one fear, I think, of most of the electorates. I mean, everybody's writing of 20. I think I saw a number, I can't remember the polls, but everybody's worried about inflation coming back, right? So that's number one. And if you go back 5 years, nobody was talking about inflation. It was never a topic, I mean, unless you were in the industry, nobody really cared about it. Nobody cared when Bernanke went up on stage. I mean, it's like, who's this guy? It's like, what's he talking about? I can't understand half of it. Or, I mean, let alone 10% maybe is what I understand of what he's talking about. And so it's like so you go back in time, I think it's just become so popular. I think we timed it really well with Truflation. So, it's like
Brendan and John and I were talking at the time about about this a lot, because it was most strategists in the market were talking about the worries, and the central banks were talking about the evils of deflation and how that could never be allowed to happen, and how hard it was to get inflation back up. And the Japanese market was so well known for fighting against this deflation that they still seem to be fighting against, although the glimmers of hope have arisen over the last year.
Yeah, I mean, I I think deflation is such a hard. Yeah, I mean, I just can't see us going into deflationary times, to be honest. I think we're just going to
Well,
be.
obviously, sovereign governments and central banks can't possibly allow that to happen.
Yeah,
It's
exactly.
against death for
Exactly.
them. So that's the best reason it's not going to happen.
Yeah.
Um,
Um,
well, Stefan, this has been fantastic. Everybody, you tell everybody where they can go find you.
Yeah, so please check out truflation.com, truflation.com. You know, we have a Twitter. It's super active. We now broke 100,000 Twitter followers. Lots of conversation, lots of insights, lots of feeds. We have a newsletter. Sign up to our newsletter. We have 70% open rates in our newsletter. So there is a lot of hunger and demand to read the stuff that we write about. And so, yeah, feel free to do that. I myself am srust99, SRUST, oxidized metal, rust 99. And that's me on Twitter. And I post all sorts of crazy things and different. We just try to think a bit differently and take different perspectives. And we've got some new interesting indexes coming out as well. So not just the standard indexes that we see, but we're trying to also make it a bit more fun as well, so that people actually want to sort of see how has the price of Rolex watches evolved over the last period of time. There was one interesting one that we saw, but I may not, maybe it's up, you know, it was like, it was in the Financial Times, and they looked at the price of cocaine and how the price of cocaine had evolved. And in fact, it dropped in price because the demand came down. But the quality of cocaine went up as a result, which I thought was an interesting statistic.
It's amazing when you have enough data what you can find.
Exactly.
Well, and a 70% open rate is phenomenal. We have a 50% open rate, which we're really
That's
happy.
also really good.
Yeah, it's
I mean, usually they're down in 16, 15%. Everybody you talk to, they're down really low. And I think that's a much more effective I don't know, model. You know, it's like I don't need hundreds of people reading, getting my email because only 16% will open it. I would much prefer to have, you know, 100 people getting the email and they're all reading it, right? Because then you know you're doing something right to a very targeted audience.
and you're more likely to get to the really, really large numbers with high open rate if you start with the smaller numbers with the high open rate.
Yes, exactly.
Well, it's great.
Exactly.
Well, thank you
Exactly.
very much for your time, and I hope everybody enjoyed this as much as we did.
No, thank you, Robert. Thank you, Brendan. Really, really appreciate being here and love you spending the time and giving me the time to listen to what we're up to at Truflation.
Terrific. Thanks a lot.
Thank you.
See you, Brendan.
Bye.
Great. Thanks a lot, guys.
Thanks, Brendan.